Hello, everybody. I'm Trimbark Tree, and welcome back to Wall Street Raider. Now, last time, I may have YOLO'd myself into a couple bankruptcies, but after all was said and done, we ended up with about 45 billion in cash. Well, let's see. We're looking here at our financials tab, and we have 42 billion in short-term treasuries and about 6 billion in options. So let's go over here. Let's just check what we have. We bought some puts on HomeSpot and do it yourself because if you recall, those seemed really overpriced to me at the time, and I still believe in that. But having played a little bit in some other games, I have realized that my put option on the Gov Bond ETF here, I think we're getting a pretty good price with the prime rate at what it is at 5.25, and rates probably not coming down. Or going up. I think they're probably going to sit kind of right around there. GDP's not changing, and typically when the GDP doesn't change, prime rates or the rates in general don't change much. So I think we're going to cut our losses. We're going to get rid of this option here, and we'll sort of be liquidated out of our big risky bets. There we go. Okay, so now let's go back to our financials tab. Yeah, we got about 43 billion and change to play around with, and you know, I was informed by some of my wonderful viewers on the last video that maybe my private equity interview didn't go so well when I attempted to destroy the world's economy with my oil short sales. So this, my friends, welcome to my redemption arc, where I show you that I am in fact a very capable and possibly evil corporate raider, because I have played this game for hundreds of hours and I do know some of the really great tricks, but I want to take it back to basics. Let's go back to what we did, and I want to take over an industry, but let's use some tricks that we know to take over an industry. I think this is a good plan, and I kind of think, I usually like to start with some of the really small industries because I have enough cash to just immediately take it over. And we could do that. We could easily take over advertising. We could easily take over security services, but those aren't super exciting. And what I was kind of thinking is, let's just pick another one. Maybe just something kind of at random that's hopefully a little bit small, and possibly we can all learn something along the way. Now, I just noticed this. Take a look at, where is it? Building materials. For some reason, their demand growth rate is 26%, which to me is very attractive. That tells me that we could sort of buy our way into this industry and maybe start making a lot of money right away. So let's go in and let's just check it out. And here we are. We're on the summary screen, and I just want to kind of talk about what some of this stuff means. We've already talked about the price to net worth, and you want it to be under 100% or around 100% when you're buying up a company, right? But there's this other one over here, return on equity, that I didn't quite understand. But basically what this is saying is it takes your last year's earnings and divides it by the equity in the company, basically your assets minus your liabilities, and that gives you your percent of return on the equity in the company. If this is very high, that means the company is earning a lot of money for how much actual equity there is, but that could also mean they have a lot of debt. This isn't a super useful number, but let's talk about some of the other ones. The P to E ratio is price to earnings, and basically what this is saying is, right now this stock is trading at 47 times. The price of this stock is 47 times what they earn in a year. So the best ones are ones with really low numbers. These are all super high. I mean, look at this 129. I mean, this is almost like Tesla level price to earnings ratios. It's not a good investment if you're a value investor. But this could be because this industry is going through some real turmoil right now. If you can see, all these prices are super depressed. So I think this is going to be a great place to check it out. And then, of course, I didn't touch on the dividend yield over here. The higher it is, the more in dividends they're paying out. Now, typically when I take over a company, I'll slash their dividends to zero. That just helps stabilize the cash situation. And then once the company is very healthy, I can start having it spit out some dividends. But I typically put that off until much later in the game, or if I'm just trying to spike a price before I sell it. Now let's go over to the projection and we can see what's really going on here. Well, so we have, let's see, no real dominant company. We have three companies in this, honestly, there's really no majorly dominant company. And so I think what we kind of want to do is find one that has a good projected return on capital assets, and then take that one and make that sort of our home company, our starting company within the industry, so that we know that whatever assets we buy, we will probably earn some money on. Now, there's some caveats to that, where if we buy corporate assets, like let's say we take over NMC and we buy assets from Sway down here, we will inherit their crummy assets and they won't pay a lot of money for a while. So it's important that you, for one thing, maintain your marketing or your R&D over here. And you try to buy from already profitable companies. That's not always possible, but let's go in here and let's check out what NMC has going on. This is New Meadows Corp. This is a building materials company, and it says they had net losses last quarter, and they're projected to earn $1.70 a share this quarter. Well, that's pretty good. And if you can see, their stock price didn't really respond to that giant loss last quarter. So that makes me think there's some serious upside to this. The analyst tends to agree, giving it about a 20-30% premium there. Well, let's see, that's 15%. Okay, whatever. Very capable management, and I like what they've got going on. I mean, I don't really see anything wrong here. Oh, okay. Well, they have a subsidiary company. I don't like that. That means I'm going to be overpaying here. Let's go check their financials. Oh, yeah. See, this is super painful because what I really don't want is this Weintraub paper. I'm actually not interested in that at all. Um, we do have the cash to go ahead and buy 20% of this company, enough to take management control. We could sell off that Weintraub paper stock, and then use that cash for our own advantage. But I kind of don't love that. I mean, this company is in really good shape overall. I mean, low debt. They have some bonds, but not much. But their actual assets, their actual working capital here is super low compared to the equity in the company. I don't love that, because you're spending a lot of money to buy a corporation that isn't making a lot of money. Especially if Weintraub paper is not earning them anything, which it kind of seems like they might not be. Yeah, as their pro forma losses last year. Well, that's no good. Let's move on then. Let's go back to the building materials industry. Let's find a different one that's doing pretty well. This EGC, now this is interesting. They have a credit rating of triple C. No, there's no star, so they don't have bonds. So that makes me think that this is possibly good, but let's go ahead and take a look at what their financial situation is. Okay, they have a lot more assets and they have a ton of bank debt, but it also means that their equity is low and their cap is low. So we could buy these and try to figure out a way to finagle a higher valuation. I think it's going to take all of our cash. But you know what? Life's too short to not be committal, right? So let's go back. Let's just go ahead and buy it. It looks like their stock is lower. I think now's a fine time to buy. This is going to be okay. Let's buy all of it. There we go. So for $20 billion, let's just keep this in mind. We need to earn money on this. Okay. So we bought it. Now let's go to act as EGC. We'll go to our financials tab. We don't really have cash. We got a lot of bank debt. What I really don't like is when my liabilities here is higher than my equity. I really want an equity to liabilities ratio of like 1-to-1 or better. And right now our liabilities is 3 times higher. So that's not great. We need to figure out a way to inject some cash into this corporation. Now, one issue is I could just contribute a bunch of capital, but I'm not sure that that's what we want. So first we need to go over to our cash flow tab. And let's set our productivity, because you know me, I like to set this at about 8 or 9%. Let's just go straight to 9%. That means long term we can earn some money. Oh, caution, your rate increase will likely result in serious cash flow problems. Did the rate go up? Not really. Yeah, take other steps. Do I want to review a revised cash flow projection? No, I know what I'm doing. It's going to be fine. I can always contribute some capital. And let's see. Let's go to our growth rate. Okay, 10% is pretty good. We don't need to grow any faster than that. Let's go back to our, let's see. Let's go back to the building materials here, and we'll go to projection. Here I am at 10%. I don't know why it's not showing the 10% growth capacity here. That's okay. Silliness. What I want to do, I think now's a good time. Let's go back to EGC, and from acting as odd lot Robert, we can contribute. Here we go. Some capital. Got a pop up here. Contribute cash. Apply. And we are going to just contribute all. We're going to go into debt to do this. That's okay. And there. All right, so we contributed 40 billion. That's more than enough to pay off all their debt, and I think we just go ahead and do that. Although maybe not yet. Hear me out. What I want to do is go over here, and we'll act as them. We're going to buy corporate assets, and it says you could buy new assets up to 10 billion, which is okay, but I'd rather buy it new from somebody else. So, or not new. Well, I'd rather buy some used assets from somebody else. So let's try no, and then let's see what kind of list we come up with. Offering some at 5% below cost. Yes, I would like to. Okay. Where is it? Building. Oh, there's lots for sale here. Hey, this is amazing. Okay. So everything I was saying about buying already profitable assets, I throw that out the window when I can find stuff on the for sale tab. This is perfect. I mean, look at this. We're going to easily be able to buy our way all the way into first place. Let's start with, I guess we'll just start with the top one. Yeah, let's do it. Okay, beautiful. Where is it? Browse for sale items. We can buy some more. And this is going to burn up a lot of our cash, but we will be able to pay off a little bit of debt at the end here. And I'm excited to see where we land on our dominance of the industry. There we go. Okay, so we're about 60 billion into this experiment here. Now let's go back to financials. We still have 28 billion in cash and 47 billion to pay off. Look at our stock capitalization is up to 66. So in theory, if we could extract all that value, we would be sitting pretty. But I think what we're going to do now is go ahead and repay this loan. Perfect. That's okay. Let's pay the penalty. That's always fine for me. Okay. That feels a lot better. We're in a much better situation. Our our assets, our liabilities to equity ratio is so much better now. Let's go to um let's see. Where is it? I just make sure that we don't actually have anything in here. Make sure I'm not buying into a nightmare. Oh man, that oil price is very attractive. Okay, I'm so tempted. I won't do it with this company, okay? Okay. Let's go back to the general tab, hit this, and I really need from that other, I need a way to just like get to this screen from the other screen. That's my UI input for this is I want to just be able to come back here really easily because I spend so much time in the industry screen. Okay, and so now we're up to 21%. Oh, I bet it needs to probably update. Let's go back to view. Um, we can run the game for a few days while we're doing this. Let's see, is it running? No, it didn't. There we go. Okay, it's running a little bit. Let's go back to cash flow. Let's say set growth rate. There, I want to set this to 10. Okay, we're going to super grow. I mean, I could grow faster just to keep up with the demand growth rate, but I actually don't want to do that. I want to, now that I'm the most dominant corporation in this industry, I don't want to grow so fast that I'm depressing my own earnings or the earnings of anyone else at the moment. Okay, so let's go back to here. We'll go back to here. And here our projected market share is up to 22.4. And boy, what is this over here? These look pretty attractive takeover targets. This would bump me up. If I could, this one's already in an A cash situation, credit rating. Let's go check their financials. Oh, they have a bunch of stock. Okay, never mind. Not interested. Go back. Can I do that? Nope. Okay, let's go here. Go back here. Okay, and so that was PCC. We don't want that. Let's check out Marco Corporation. Check out their financials. Okay, this is much more takeoverable. Let's see. Do I want to buy it? This would get me a lot of assets. The downside is they have a lot of bonds, but I maybe have an idea for this. The real question is, can I, as a player, handle this? Um, how deep into this do I want to go? I think with this much, I think we can afford to do this. Let's go back here. We're gonna go acting as player. We're gonna go ahead and buy this stock. Oh, okay, that's annoying that it's owned by an ETF, but that's okay. We'll move on. We'll buy the 93%. Okay. Borrowing. Yes, that's okay. Beautiful. I own it, and now we're gonna buy the rest of these shares off of that ETF. Now, whenever you buy and you have to make an above market offer, I would typically suggest 25 to 30%. They'll almost always accept it, especially the ETFs. I think they're almost hard coded to accept anything over 25%. So there we go. We now own Marco, and here's the thing. They own some bonds. They have some bonds. Now I want to go acting as trim or as the player. Let's see. Can I find, let's see, bonds. How can I find bonds to buy? Let's see. Um, hmm. How do I do this? Where would it be? Under cash flow? Bonds. Where would I find this? Financials. Oh, I don't know how to buy bonds. Okay. Buy Mark Marco bonds. Will this work? Probably not. Oh, I already own all. Okay, so it thought I wanted to buy the stock. Well, that sort of tracks. Here, let's go here. Bonds, cash flow, financials, earnings. Um, hmm. I wonder who owns the bonds that this company has. Let's go to here and can I redeem my bonds? Yes, if you want to buy back the publicly available. Yes. Okay, so they're trading at 84%. If I try to redeem them, it would be, yeah, so they're not callable at 100. Normally, if you call them, you got to pay 105% of face value. If you can buy them back for less than that, you're much better off. So let's try and buy them back because what I'm going to do is just merge this sucker in. Yes, let's pay it off. Perfect. Okay, so now we have to go back to the player, act as the player, and we are going to contribute capital to somebody. Let's see. Oh, okay. I have to go to here, find you. Now I contribute capital to you. And here I'm going to pick Empire Gypsum. They're sort of the better corporation. I'm going to contribute stock. Okay, and now I'm going to select the Marco stock and hand all that over. Okay, perfect. And now let's go to Marco and go to, what is it? Probably, oh, I'm acting as, okay, view Marco. There we go. Was it financials? Where is it? Tax-free liquidation. We're going to liquidate Marco into Empire Gypsum. Success. Everything is done. Now we can act as EGC and take a look at our financials. We have no cash. We have 35 billion in debt, but our equity is 71 and we're at a total stock cap of 78. But I believe that's pretty much how much we've put into it. So now we need to go here and check our dividend. Let's see, it's currently at 0. So that's fine. Now let's go to general. Let's scope it out. What does it think? We're going to make a $1.82 per share. We could probably set a dividend to increase. Okay, it says we have a market share of 30%. That's pretty good. I'm pretty happy with that. Let's go to our financials tab and just see when is our next earnings report. July 13th. Okay, what do we say we just go ahead and play until July 13th? This might take a little while. While we're doing that, you're not going to believe this, but I think I'm going to go into the commodities tab and see if that oil is still really low. Oh no, I missed it. I missed it, guys. Okay, well, in retrospect, I could definitely buy Bitcoin's super cheap. Ethereum is super cheap, but I kind of want to buy gold, although gold, the return isn't that great. Why don't we go ahead and buy some Bitcoin futures? Let's see if we can just make some money on this. We won't make a ton, but a little bit, and that's going to help pay for my big experiment here. We're doing all right. We already made a little bit of money. Let's let it run. Let's check our options. Okay, they're doing all right. It seems like, let's check this out. Yeah, okay, that's diving now. That's still leveled out. Providence, oh, it did go down a little bit, but I think what we need to do is when rates drop again, we could buy. For now, let's just leave it over here in our streaming quotes. That reminds me, I should go to Empire Gypsum and view it, add this to my streaming quotes. There, now I can keep an eye on it. 202. You know what? Just to prove that we can, I think we should go to here, over here, and let's split the stock. And I like what I like to do when I play is split the stock so that sort of their base price is around 100, so I know if they're doing really well or really bad, you know? So that's a good way that I do it so that I can just see, oh, okay, they're dipping. Oh man, it's not it's not doing great. We're just trying to get to July 13th, basically hoping that we'll have a little surprise upside on our earnings report and we can cash out, go public, and make some good money. Yeah, the stock cap, it's doing okay. I wish I could buy some options on this as myself, but the thing is, you can't really buy options or sell options on a fully publicly owned company. So we're just going to have to sit and wait and take advantage of our strategy a little bit down the road. Now, if you guys recall, when we first bought this, the management was okay. Now it's worse because we basically bought a bunch of crummy assets off the for sale site. You know, it was like with the Facebook marketplace of business assets, and you got what you paid for. Ooh, I forgot. I forgot I had an interest rate swap. Oh, okay. Well, that, my friends, might bite us down the road. It definitely might. Okay. Well, I'm not saying I regret anything. I regret nothing. This is how you learn. Okay. Okay, these are all sort of tanking. I do love to see that. I mean, not okay, look. Oh, Empire Gypsum. We pause it. Let's go back. Their financials reports on July 13th. There's always seemingly a nice little run up in the stock price right before earnings, but I almost think we play it out. We wait until after earnings, and then typically the stock price reacts to what the next quarter's projected earnings are. So if that's going to be high, then we're in the money, and I think our stock price will shoot up. If it's low, then we're sort of in trouble, and be scared. Now I'm really curious if this screen will just automatically update when we get to July 13th. So let's keep an eye on it, and there we go. It did update. Beautiful. And earnings were up from 14 and beat the street's estimate. We earned about $1 billion. That's fantastic. Now, let's read this. The above do not quarterly income for the quarter was that extraordinary after-tax income items, which I don't know what that would be from, but we did somehow. We turned out pretty good. So now let's keep an eye on our stock price. It fell down to 109. Let's scroll down a little bit here, and let's see, or maybe, okay, projected earnings next quarter will be 162. I think that's pretty good. I actually don't think that's that bad. Although, if you think about it, that's sort of a price to earnings ratio of like 100. I'm not particularly loving that either. If this stock price goes up to 120, 140, I would take 120 or 130. I think we just take it public. There we go. It bounced up. Okay, it's at 128 right now. I was just saying, if it hits this, I think we take this company public, we cash out. Now, so let's see how we work out in the end. Let's go over here to shareholders. We'll go to a public offering. 200 million. Yeah, that's fine. Not really. The numbers aren't really relevant there. Okay, that's good. Now let's go to financials. We're going to use that cash to pay off debt. It's going to make the company look even a little bit better. Okay. We're going to run the stock for a little while. Oh, yeah. Look at that market cap. That's beautiful. Okay. I should have stopped when it was at 166. Okay, there. It's looking really good. Now would be a good time for me to sell out, because if you guys saw, look at my balance sheet. Now our stock is worth a ton of money. But I have one more plan, because now that there's some publicly available stock, I'm going to switch back to the player. And what we're going to do is buy some puts at 154. Okay, 153, that's okay. We're going to buy some puts. We're going to keep them really close because we're about to completely cash out of this thing. Okay, and we spend 900 million on this put. Hopefully we can make some money back on that. Okay, we'll do another one here. Beautiful. And hopefully that doesn't push the price too much lower. Nope, it's still good. So now we're going to sell the stock. And to do that, we have to go back to the player, go back to stocks and bonds. This value, this is way more than we put in because we bought the initial company for 20 billion. We put in 40 billion, and then we spent another 20 on the other company, Merco, that we ended up merging out. So I think we almost doubled our money on this. And now let's sell this all. Yeah, tax basis of 95. This is fantastic. So we're earning over 50% on this little maneuver that we just did. And cash out. All right, we earned 30 billion on that. That was incredible. And look at that, friends. I did that without any commodities trading. Are you proud of me or what? Okay, so now that worked out great. Now we can see the Empire Gypsum price is falling a little bit. Let's let time run a little bit longer. And where is our Empire Gypsum? Yeah, right here. Look, our tax basis on these, and then our current value. So buying puts on a stock before you dump all the shares is a great way to make some money. So there we go. We just made an extra couple billion on it. Let's see. Do you want to sell it off? Oh, it won't let me do that. Interesting. Okay. It won't let me. What is going on? It won't let me sell these? Come on. Come on, game. Okay, there seems to be a little bug with buying and selling these. Let's just move on. Maybe to kind of fix itself. It does kind of tend to do that. Oh yeah, look at how much lower that is. So that's way down. Now I really want to sell them. Okay. And look at that. Already our net worth is up to 86 billion. That whole thing worked out really, really well. And we aren't holding on to anything. This stuff, okay, so our do-it-yourself ones are doing well. It won't let me sell those either. Can I do that? Can I exercise? It won't let me exercise. No? Come on. Ah, that's frustrating. Okay, well, I gotta move on. Oh, I forgot. Our Bitcoin, yeah, it bounced back up. Holy cow, now is the perfect time to sell out of this. Yes, fantastic. Okay, beautiful. And look at that. Oil's at 116. Ooh, okay. Well, let's just one. We're just gonna dabble a little bit. When you see, okay, when you see this price and the spread going through the future and it's very flat, what this is telling you is that the market typically this means the market thinks it's either going to go down or stay exactly where it is, which is unrealistic. When I see this price over time here as flat as this is, that tells me that all the traders agree the price is going to go down, and they just don't want to admit it to themselves. It's almost to what they call backwardation, where the price is actually falling in the future. But it's not quite there because they don't want to admit it to themselves. But I'm pretty confident I'm going to make some money on this, and this is just pocket change at this point. But I'm only going to do one so that it can't bankrupt me because we were so successful. Oh, look at that. The gov bond, the prime rate fell, and GDP is increasing. Okay, well, I should have bought some government bonds back then, but now I almost want to buy some. Yeah, you know what? I'm gonna buy some stock in GovB, just a little bit. We're just gonna go like 4%. That way we don't have to pay. Yep, no tender offer required for a cool 23 billion. I doubt we'll lose anything, but I'm thinking this price will actually go up a little bit now that the rates are falling. But I think it's a good time for us to, let's see, go back to the market reports and find another industry that we want to raid. Last time we kind of got super lucky with how everything turned out, and it kind of makes me think maybe we go here and okay, try to find where is it the for sale options. Oh, you can't see it as one of these companies. Can you see it here if you're just some random company? Cash flow. Oh, it's because I am here. What if we go here? And financials, cash flow. Oh, I have to be acting as this company. So I have to own a company? Okay, that doesn't seem right. Let's go here and we'll go, hmm, what's a good random industry to tackle? Hotels and casinos? I mean, those typically are like really integrated stock wise. Like they typically a lot of cross ownership, but there's only three of them that are owned, so maybe that's not a big deal. This one's not traded, um, not traded, and not traded. So those are all wholly owned. Let's go to the projection. Actually, I want to go back to the summary. None of these have very good return on equity. Let's start there, and then let's go to the projection. Ooh, this is rough. The largest company has a fairly high price to net worth. It has a really good market share, and the return on capital assets is really good, but that credit rating is pretty terrible. And if we go check, they have a ton of debt. Okay, the equity and the cap. I don't think there's a lot of growth room for me, so I kind of think hotels might be out for right now. Let's go check on another industry. Um, Drugstores. Let's take a look at this. We'll go over here, and I believe this is one industry where, yeah, one corporation has a lot of market share, and they're probably getting sued continuously. Let's see, does it say that anywhere? Yeah, it's getting sued for a lot of money. Strong sell. Let's take a look at earnings, financials. Oh wow, they do not have a lot in their contingency. That could really burn them. I would probably short sell this, but I don't think it's a sure bet. Short, okay. When I first started playing Wall Street Raider, and I saw a company getting sued, I would always go and try and short sell that company as like a hope that they would have to pay out a lot of money and then I would make a bunch of money on that sale, on that short. But it didn't always work out. What you need to do is you find the company that's suing them and buy options on that company. And you have to buy them for a couple years out because these lawsuits can take a long time. But I think it's worth just buying. Let's just buy. Oh, it's not publicly traded. Well, who owns you? Cheapskate Brands. That sounds like a fun company to work for. Um, they are in the retail broad line. Okay. Well, that's a huge industry that I'm scared to enter. Let's see. Yeah, because like, look at that business assets. That's a lot. Um, whoa. Whoa, this company is really struggling. Look at that equity and total stock capitalization. That's terrible. I think that this company is going to go bankrupt, is what's going to happen. Let's go check cash flow, net profit from business operations, and scroll down. Current cash and equivalents plus minus projected cash flow, estimated cash and equivalents in 3 months. Holy moly. Okay. Well, let's buy some puts because they're definitely going bankrupt. Um, let's see. Their stock price is 40. Okay, we can probably wait it out like that long and we'll definitely make money on this. Let's do it a couple times. There's not a lot of money to be made, but every little bit helps. So let's go ahead and buy some of the. I might even go longer because I've had a tendency to get burned. Companies take a long time to go bankrupt in this game. There we go. Okay, especially because that cash flow projection is quarterly. All right, well, that's not what I was trying to do, but I did find a nice, good target to make some quick, easy money because that one is almost guaranteed to happen. Let's find a different industry, hopefully one that's a little bit smaller. Um, Footwear. Okay, let's check out footwear. What's the story here? We have low return on equity, decent net worth, price to net worth, really good P to E ratios, honestly, except for Econo shoes. Look at that. They're making like a penny. But mostly buy. Okay, and then industry demand for this year 4%, long-term demand growth 3%, and everybody is keeping that in line. So let's see. Let's scroll down here in the summary. It says for good but not exceptional profits, and demand growth picks up, capacity is reduced. So apparently the industry is currently shrinking, which is making everybody a bit more profitable. Interest rates are really low, so holding a bunch of debt isn't necessarily bad. But let's go ahead. Okay, Icon, which I'm going to assume is essentially Nike, and then we have Reebok right underneath it. Let's check this one out. At 200% or at 175% price to net worth, that's not great, but it does seem like a fairly well-run company. Let's check out. Okay, last quarter was 437 million. That's okay. Their debt situation is pretty good. This almost seems like a company that I would buy and hold on to. It already owns 46% of, let's see, where did it say that? I feel like I remember seeing that on one of these. 46.8%. Yeah, we can buy this dominance of the footwear industry and just move on and just hold this and help this company become more profitable. And maybe Icon is going to be the first company we actually truly hold on to. So let's do it. I kind of like this. Let's go. Well, actually, hear me out. We're going to buy some calls on this, okay? And we'll just keep them super short term like this. 10%. Okay. And total cost 90 million. Okay, cool. And now I'm going to go ahead and buy all the stock. And let's see. I wonder if that 90 million is just going to disappear or if I'm actually going to make money on it, because when you buy out a company, all the options are closed out. I think it'd probably save me a little bit. If not, yeah, so it said the options are settled. It didn't tell me how I came out on those. Okay, so for 30 billion, we just bought the largest shoe company in the world. I'm very happy with it. Let's go to our cash flow. We are net profit 1400 and current cash, we're losing a tiny bit of cash. So let's go back. Let's scroll back up and see what's going on. We're spending a lot on growth, so that's okay. And we're spending some on interest. That's also okay, because I think as a player, we could just pay that off if we really wanted to. It seems like, um, nope. Let's act as, there we go. Let's go back to cash flow, set our dividend, and I'm going to set the dividend here to 0 so we can build up some spare cash and pay off our debt. I'm just going to let it sit. Over the long term, this is going to be okay. Our productivity is currently, well, it says 5%, but what we're going to set it at is 9%. We're just going to leave it there for the long term. I think eventually that sort of averages out to a fairly profitable company. And then for the growth rate, this is the real tricky one. I don't want it at 10% at all. Let's keep it at more like 3% so we're not outgrowing our shoes, for lack of a better word. Okay, and we'll just run this baby for a few days. Go ahead and check out on this page 46.8. Okay, I think we're going to be okay. It's convenient that the stock price is already basically around 100, so we can just play for a while, and we know that if this goes up, we made a good choice. If not, that's okay. We can always do some shenanigans and sell it off somewhere. Um, Do it yourself has really crashed. Okay, so now I'm really wishing I could sell these options that I have. Where is it? Player. Nope. View player here. and we'll go to options. Boy, it would be really nice to be able to sell these out. Especially these. Yes. Okay, it's not letting me do that. Now, hear me out. Let's try something. We'll go to do it yourself and we'll go sell puts. Oh no. Okay. We got an error there. So I can't even do that. That sort of explains it. Okay, so let's just go back to commodities. Let's view the player. And here, how's our oil doing? Not great, but I probably haven't played enough days. It's probably only been like 2 days since I did that. Holy cow, silver is really high. I could definitely short silver. Or better yet, short a silver mining company, but it's not quite that directly related. Now, there is an interesting tie-in with, for example, oil prices and oil companies in the game. Okay, don't mind if I do. And then silver and gold and the precious metal mining companies in the game, but it's not a direct tie. But basically, if oil's really high, the oil companies tend to earn more money, and same with like the precious metals and the precious metal companies, but it's not an exact one to one. It's not nearly as clear cut as you would kind of hope it would be. Okay, silver's climbing. Um, I could do this, but honestly, a lot of, oh man, wheat at $9.11. That's way too high. Now I think what I need to do is buy an agribusiness so I don't feel so bad about shorting the wheat. So let's go over here. Um, Actually, I want to go back to me and take a look at my financials. We have about 10 billion in free cash. And then we have, what is our stock scenario? Oh yeah, I still have the gov bond. You know what? I could probably sell that at any time, but I don't need to yet. But if I need cash, that's a good one to sell. Okay, let's go back here to the market reports. We're going to go to the agribusiness and we're gonna find somebody with a bunch of cash, no outstanding commodity liabilities. Holy cow! Like, look at this. This company is way overvalued, but that return on equity is pretty good. Strong sell. Let's see. How big do you think Dell Foods is? Can we short sell it? It almost doesn't make sense. Look, they're earning money. They're consistently earning money, but the game thinks that they're going to crash to 63. Let's see if we can figure out why. It's trading at a large premium over its underlying value. Okay, the assets 16, equity. Okay, yeah, I mean, it would, especially in agribusiness where there's not a lot of long-term growth. This kind of valuation is sort of crazy. But if you're earning 431 a share, um, you know, that's way better than what we were doing in the buildings products industry. So I'm not sure that I'm willing to fight that. Let's go back to the industry and check this out. We'll go to projection. Yeah, it's temporary growth 15%, long-term growth 5%. Ooh, doggies. Okay. But here is the one that I spotted that looks kind of good to me, but actually, oh, this one's already owned. Well, that's frustrating because I kind of wanted to buy that one. How about this one? It's a little bit bigger. The return on capital assets is pretty good. I like this one. Let's take a look. What is ARKN? Arkansas Farms. Strong sell. I disagree. Let's go check the financials. It has some commodities, barely any business assets, a tiny little bank loan, a tiny little equity, and a tiny little market cap. This is perfect because we can go ahead and buy it, but let's check out their commodity position right away. Okay, they are short wheat at 533. Well, that is embarrassing, and what we're going to do is fire this ownership and we're going to turn things around with a little bit smarter commodities position here. Let's buy it all out. Okay, that's fine. We're easily going to make that kind of money. Beautiful. I'm going to actually contribute some capital straight from the player. We're going to go right here and we're going to give them, let's see, just a cute little 5 billion in cash, and then they're going to turn this into a lot more. Oh, okay, I burned up all my cash buying this company. Now let's go act as them, go to commodities. We're going to cover this because that is just painful and will keep losing us money. And now we need to go ahead and short the wheat because we know it's coming down. Let's see, how far out can we go? The real question is, how far out do we want to go? I kind of think it'll crash pretty soon. Here, let's not leave too much on the table. We'll give ourselves a few months and we're going to try and kind of go max commodity position shorting this wheat because I don't think we could lose that much. If for some reason they do lose some money, they do have Daddy Trim to come cover their checkbooks. Whoa, look, it already crashed quite a bit. I still think it's going to keep going, so let's just keep buying on the way down. Okay, and now we'll just play it out for a few months. And we're going to make a cool few hundred million, possibly a billion, just on this little wheat trade. And let's keep an eye out, see if there's anything else. This agribusiness company. Let's keep reading our general here, stock price. So reasonably competent. Um, Not going to worry about the supply demand situation. Lots of losses. I don't really know how it could be losing that much. In fact, let's go here and let's just kind of do the classic trim thing. We'll make sure dividend is set to 0. We're going to set our productivity a little bit higher. Now in agribusiness, 9% is probably overkill. So let's just set it at a nice little 7%. And then for our growth rate, I'm okay with 10, although that's going to burn through my cash. But that's okay. We're going to have cash rolling in because we finally have someone smart making our commodity hedging decisions here. Let's browse the for sale items. Is there any? Oh, there is. Oh, that's a lot. Can we afford to buy all this? Let's see. Can we do it? I'm really curious what's going to happen. Yeah. Okay. Well, apparently we just bought 12 billion worth of assets. Let's check it out now. We still have okay. Okay, we could pay off some debt if we wanted to. That would probably improve our capitalization. So why don't we do that? Pay off our pay off 4 billion. So now our debt load isn't quite as bad. And this company is a little bit better off. So I think I'm going to add this. Um, Prudence, I should wait until that bounces up a little bit and then we can sell out. I don't really need that. It's not doing anything for me. I thought it would maybe make a little bit more movement, and it's just making sideways movement. Not what I need. Okay, so our equity fell. I wonder why. Oh, it's probably the commodities situation, right? Let's go check on that. Yeah, it's just sort of hovering right there. I'm confident that wheat will return to $4 at some point. Whoa, speaking of confidence, let's go act as player and view player and sell some more oil. I know I said okay, I'm not gonna do it. It's an addiction. I can break it. I'm gonna be fine. But when you see a good price, you're foolish if you don't take it, right? Like I knew Bitcoin was low. I bought, I cashed in, I made a cool 3 billion. Ooh, whoo, boy. That's okay. It's a good thing we have a little cushion here. Oh man, 150? Oh, geez, I am in trouble. Okay, well, what I'm seeing here is a very, very good opportunity. That's going to be really hard to pass up. Did you see that? It spiked all the way to like 150 on the oil price. And now it fallen back down. I kind of I missed the moment, which is a bummer, but that's how it goes, you know? You can't time the market. If you're trying to time the market, you will lose every time. But I don't think it would be a good trim bark tree video if we didn't end completely YOLO'd back into oil again. This is totally going to pay off, my friends. But I do think we will have to leave it here. I've had a great time. I'm actually really happy with what we've accomplished. We made a huge amount of money with our building materials play. We exited right away, which is fantastic. I'm hoping by the time we have our next video, I will be able to sell my options. We'll be able to kind of clear some of this up, and let's just take a look. Okay, we're doing okay. I think before we leave, let's go ahead and sell off our GovB. Oh yeah, we made a little bit of money. That's fine. We can go ahead and repay our loan, and we will end with 16 billion in cash, 40 billion in our stock portfolio, and of course, a lot of craziness happening in our commodities and our options. Look at that. Our commodities were already earning money. See, it was a great choice. And I hope that my aforementioned job interview is going better now because I have not lost money and then have in fact earned some this time. I'm really happy with what we've done, even though we've barely advanced time. We're sitting pretty, and we own the largest shoe company in the world, and we now own a bunch of land down in Arkansas, possibly with some diamonds on it. We may have found a diamond in the rough down here, especially because this our new CEO down here knows how wheat prices work. And so I'm excited to see how that pans out for all of us in our next episode. But I'm going to have to leave it here. Thank you guys so much for watching. I appreciate you being here. If you enjoyed the video, please make sure you leave a like for me down below. It helps other people find the video. And of course, hit that subscribe button if you haven't already, or if you find me entertaining. And I really hope to see you guys around for my next Wall Street Raider video. And of course, I love hearing your comments. So please leave your comments down below. I try to answer every single one of them, and you guys teach me just as much as I teach you. Thank you so much for being here. And on that note, my friends, I have been Trimbark Tree, and I will see you in the next one.